the heck is happening to the stock.
It made sense that it came down. It doesn't make sense that it came down to this point. Like something, either I am completely wrong or the market is completely wrong.
The biggest green flag for me personally would be to see management buying in the open market. That would give me a lot of confidence to do so myself as well.
Yeah, it's a strange one. Why wouldn't they be doing that?
Welcome back. It is always it's a pleasure to talk to you again. I'm excited to have you back on the show. Last time we spoke was about Palantir, quite the company. It's doing pretty good so far. And today I would like to talk about PayPal with you. Everybody seems to have an opinion about the company. And I think you know a thing or two about the company itself. So maybe I think we can avoid all the history and what they do. I'm assuming people listening to this will know what PayPal is and are more interested with what the heck is happening to the stock. It's down over 80% from all-time highs. So maybe just could you share your view as to what is happening? What is the market seeing and pricing in maybe?
Well, being down from all-time highs is quite natural. You know, it was during the peak COVID, it was kind of bubble. They made a lot of money during that period, but it was, misallocated. They did, some M&A deals that weren't very favorable that had to be divested, years later. It was a very bloated company. It still is kind of bloated, but, if you look at, revenue per employee or, efficiency metrics like that, it's not too bad, but it's still, a bit bloated. And, it made sense that it came down. It doesn't make sense that it came down to this point. Sometimes, I make a valuation of a company and when I see that there's like 100%, like fair value is like a double from where it's trading, it makes you stop and think like, okay, what is wrong here? Like something, either I am completely wrong or the market is completely wrong. So what I usually do then is I do a reverse DCF. So instead of, trying to project my own forecast of what do I expect will happen to the company, growth, cash flows, and risk, I just see, okay, what is the market expecting? So I work the other way around. So I make inputs to reach where the stock is trading today. And if I tell you, using 2024's free cash flow to the firm margins of 16%, the market is pricing in a decline of 6% per year over the next 10 years. So they did 32 billion in 2024. The market is expecting them to do 17 billion in 2034. So the market is pricing them currently as if they're going to decline 6% in revenues per year, assuming they have the same margin, which is just like, it's not reality. It's not what will actually happen. I mean, they are still growing, never mind like declining. They are growing still. They're still a juggernaut. They're still positioned well for the future of finance. I mean, they're doing a lot of, innovation in the space. They're like an early mover. They have a new management that is actually, well, I didn't mind Dan Schulman, the previous CEO, that much. He made some mistakes, but this new, Alex Chris, the new CEO, he came in, he cleaned house, he, replaced the whole management team. He set a new course, no, we're actually going to grow and we're going to go profitably. So yeah, there's a lot of changes happening to the company structurally, but nothing that is happening today or has been happening since the time I've been covering the company, which is a couple of years now. Nothing is telling me that the company is going to decline 6% per year. So the market, I believe, is wrong. So the question then becomes, okay, so why is the market pricing it this way? And I'm not, too fond of looking at stock quotes. I don't look at charts. Like even when I study a company, like the chart, I don't even open it. Like even for my own investment portfolio, I don't look at the, stock prices, stock chart. But it is interesting trying to, all we can do is guess, right? Okay, so why is this happening? And I think everyone more or less is aware that PayPal is cheap and undervalued. I think anyone you ask can confirm that. Like, even if they don't like the company, they say, yeah, it looks cheap. So everyone is already aware that it's like super cheap, super undervalued. But what we don't have for the stock price to actually move is we don't have any material results from PayPal World, Fastlane, PayPal Everywhere, all of these new Venmo innovations, the crypto stuff, the ads platform. We don't have any material results from that yet. So there hasn't really been a catalyst. So that's why I think it just keeps compounding downwards. But sorry if I'm talking too much, just one last point. As an investor, I don't mind it too much because they can repurchase so many shares at this price point. It is severely undervalued. And there's not really much downside from here. So, if I take my valuation model and the free cash flow that I forecast that they will, generate, if that goes towards buybacks, the company will be private by 2031. Like, they will have repurchased all shares outstanding. So that makes me believe that, okay, the stock is really down. There's not much else, there's nowhere else for the stock to go, because if it just keeps going down, they're just going to take the company private. So, there will be shareholder returns regardless. So I'm not too worried. I think a lot of people are frustrated with the timeline. It's been trading down for so long. It hasn't been doing anything for the past 3 years. Like, even, bulls lose patience. I think the average holding period for stocks, keeps going down year over year. I think as of I think the statistic I saw for 2024 was like the average holding period is 8 months. So I understand that when the stock hasn't moved for 3 years, it frustrates a lot of people. So, I myself, for my investment philosophy, I'm not too worried. I can kind of see why the market is doing what it's doing to the stock, but I also believe that, downside is extremely limited due to the buyback dynamic at play. And I think they're really well positioned, for the future of finance. And I don't mind it too much. So that was a long, brief tangent.
No, but
I'm
PayPal deserves some long thoughts. It's a lot more nuanced than just having to explain the company in a couple sentences. So it deserves a little bit more explanation. There's a lot of things happening. There are many opportunities for PayPal, which you mentioned, which we'll probably get to at a later stage. But there are some risks with the company, for sure. There is a lot of uncertainty about stable coins, although I'm not too worried about that myself. Obviously, you have competitors like Stripe and Adyen competing with the unbranded side of PayPal with Braintree. You have the rise of Google Pay, of Apple Pay, which is taking...
Let me just stop. So let's talk about these competitors, right?
All right.
How long has Stripe been around?
Definitely
more than 10 years.
Definitely.
How long has Apple Pay been around?
Longer?
More than 10 years. How long has Google Pay been around? More than 10 years. How long has Adyen been around? More than 10 years. So this is not something new. Like, these have been in the same marketplace with PayPal, for the payment processing side of things. And everyone's margins have been, destructed, because it is kind of a race to the bottom when it comes to payment processing. Because more or less, when you take Stripe and PayPal, when you choose, let's say that you run a commerce business, you typically get to choose, okay, do you want to go with PayPal or Stripe? And you will typically go with the one that is cheaper, like, because the offerings are more or less the same to like a small to medium-sized business. So all they do is undercut each other into perpetuity. That's why you see take rates going down from, I don't have the numbers in front of me, but, if you go back 10 years, it was above 3%. Now we're at like, 1.8, 1.7, and it keeps going down because it is a race to the bottom. So you're just undercutting one another into perpetuity. So that's what Alex Chris really has highlighted. Like, no, we have a value proposition for everyone that is connected to our network, that we are actually going to be able to raise our take rate over time. That's why you see the payment volumes take a hit in the short term in order to actually exit that, race to the bottom. So there are a lot of dynamics at play. So when people say, oh, there's a lot of competition, I mean, it's been competition forever. And PayPal has been dominant has been dominating those other companies, for more than a decade. I mean, they went from something like 25% market share to still being around, 20% market share. So it's not like they still, if you make a digital payment, it's likely by, using PayPal infrastructure, they have a 20% market share. They're still like a giant. So it's not going away overnight. It's definitely not going away to the tune of, negative 6% per year in terms of revenue. So yes, it is competitive. They are doing something about it. That's why they have to provide value more than just, processing the actual payment. You have to have some other, as they call it, value added services to make people choose you and to make people pay up and want to use you, which is what they're doing with Fastlane, all these, guest checkout solutions and all these other integrations. So they are working on that. But it is competitive. It has been competitive, throughout the company's history, post 2010 when e-commerce actually became a large thing. So I wouldn't say that it's I don't think that's why the stock is down personally, but I mean, it's still, just guessing. So sorry to cut you off. Go ahead. You were talking about risks.
No, I get what you're saying. And I think you're right. The risks have been there for a long time already. Although one could argue that Apple Pay used to be more present in the physical world, but is now more readily available in the online world as well with single payment options. So what's it called? One-click options. But yeah, I get what you're saying. What is your view on perhaps stable coins, or maybe, PayPal is quite expensive. We use PayPal ourselves for a couple of our services. But if we could choose between, for example, Stripe, which we also use, what makes merchants choose PayPal over Stripe in the long term? Because if Stripe offered the same things as PayPal, we would choose Stripe every day of the week because it's a lot cheaper. It's not even close.
Yeah, I use Stripe as well, but not for that reason. Just because it was many times easier to set up Stripe than it was to set up PayPal. So that's why I chose it. But the thing is, for small to medium-sized businesses, which is like Alex Chris's forte, that's what he did at Intuit. That's what he, made him such a great prospect. We haven't seen too much on that front. They do talk a lot of commentary about it. Integrating, various solutions just for small to medium-sized businesses. But I think the value over the long term will be, which I also think is PayPal's main moat, is actually the data, because they are by far the largest payment processor in the world. So when we talk the ads business, we don't know much about it. It's been on the card for 2 years now, but they haven't really shown much for it. But let's talk hypothetically. So let's say that you are, visiting, be it Nike.com, whatever website. Instead of having, a generic, landing site that shows you, hot products, in general or whatever. Whenever you go to a site, the landing page is already according to your taste, your purchase history, because they know that you made these purchases. Sometimes you use a business card for this kind of product. Sometimes you use your personal card for this kind of product. So already there is, innovation that they've been doing, with the guest checkout solutions, where, it can automatically select, based on your purchasing history, and autofills the address, it's a company purchase, it should go to this address, or, they already do that autofilling stuff. But what if, instead of, serving you traditional ads, you can actually, based on, the user profile, you can have a wholly, customized shopping experience to whatever site you go that is connected, to the vault. I think they said something like about a third of all credit cards, all cards, so debit, credit, whatever, all cards in circulation at this point in time, about a third of them are vaulted with PayPal. That is massive. That is scale that no one is even close to. And when you actually start to leverage the data you have on, customers, you can actually start to do some pretty, interesting things that something like Stripe can't do to the same scale. I think they have about over 300 million merchants connected to the vault. And as that keeps expanding, that moat just widens. So I think something like that can provide a lot of value over time. So it's still, up in the cards what their actual ads will be like. Because, scrolling through the PayPal app and you see like, oh, there's a discount here. Like, that's not interesting. Like, anyone can do that. When you actually started talking like using the PayPal platform to actually leverage that data properly, intuitively, like natively, so it doesn't feel like you're being served ads. It feels like this is a, normal browsing experience, a regular shopping experience, but all the products that I like. And it changes dynamically depending on, how you change as a person and how your shopping habits change and so forth. So I think something like that is what could serve as, long-term value to differentiate, from all these other payment processors. Because if it's just about processing a payment, sure, you can talk about, processing speeds, whatever. They're all equivalent more or less, there's not much, differentiation or much more to there, I believe. But I think the ads and the vault in particular can be, a differentiator for PayPal.
So you mentioned a couple interesting things there. The data being a potentially very unique mode. And the more we learn about AI today and in the world of technology and online, we see more and more that data is sort of a commodity, but the more unique it is, the more powerful it becomes. So I see your point there. But with PayPal having this new management team, and they're trying to do a lot of different things now. Like you mentioned, the old management has gotten rid of it. The new management is very focused on innovating, being, a lot more transparent. I can really appreciate the new management team's honesty, and the new incentives look a lot more aligned with long-term investors.
It's been frustrating a lot of investors when the CFO goes on these bank conferences and talks about the product like, yeah, it's going to be a rough quarter, like keeps repeating it and the stock price goes down. So yeah, like the transparency goes two ways. But as you mentioned, like they're doing a lot. Like we didn't even talk about like the whole being first on the ball in terms of agentic shopping. Like we didn't even talk about that.
My question was regarding, do you think, PayPal has been, I would call it more of like a Frankenstein acquisition-like company. They've been buying a lot of different businesses over time, and they have been quite transparent about the fact that not everything works seamlessly together, unlike a Stripe or an Adyen that is more like built from the ground up. Do you think they are able to make the transition work with all the different brands they have? And, it's hard to turn around this slow juggernaut from the past into like this new sort of innovative company with just a new management team.
Yeah, I mean, I think we're seeing it already. The perfect example is that most people probably, like if you talk about regular people, they don't even know that Venmo and PayPal are like the same company. And we're already seeing a seamless integration, with PayPal World, where you can Venmo someone using a PayPal account in Germany, or like Mercado Pago, like in Latin America, or, Tencent Pay, whatever it's called in China. So they're already integrating, Venmo and PayPal, because they used to be like two separate entities within the company and they did not collaborate. Like they have spoken out about this, like, yeah, we have PayPal, we have Venmo, we have all of these different, M&A deals that have gone through. But as you mentioned, there's like no collaborative effort. There's no like learning from each other. There's no, integrations between each other. I think that has been changing, and we're already seeing like the two major products start to, work together, Venmo and PayPal. So yeah, I absolutely believe that they will get rid of those that don't fit into, their, what is called mission statement, like what they're trying to do. They will get rid of those. They have already started to, divest and sell some parts of the business that don't fit. And whatever is left, I do believe that they will integrate and make it seamless together. And I think Venmo is a perfect example of that.
Am I correct in saying that PayPal is also trying to get into the physical retail as well with NFC?
Yeah, I mean they're already operational across various offline stores. I think it's like second half of last year is when that started to pick up. So yeah, they're also doing that. We don't really know what the actual material results are, what kind of volumes we're talking, what the expansion plan is, what the TAM is, how much, so we don't actually know how much it will do for the business more than, Alex Chris saying that wherever you want to pay, however you want to pay, we want to be there for you. So they want to be available everywhere, and that includes offline. So yeah, they've already begun doing that. I think they call it like PayPal everywhere. It's like the campaign thing. So it doesn't have to be, what do you call it, NFC. I don't know the tech they use, for the, I guess most tap to pay is it the NFC really? I don't know what the tech is, but it doesn't have to be like, a PayPal account. It can be the backend infrastructure. So when you go to an H&M, for example, those terminals are from Adyen. So they are like, actually doing the payment processing offline. I think PayPal is doing both that, but also like the payment solution for actually paying. So, you can use your PayPal account, you can use Apple Pay, linked. So yeah, I think they're doing a lot for the offline. As for actual material, financial results from it, we don't know yet.
For investors that are interested in PayPal, perhaps we have shareholders listening that are worried about the company. Maybe me included, I'm pretty interested in PayPal. I've done a deep dive, which will be released quite soon. And I'm very intrigued. I see a lot of the same traits and characteristics you mentioned, but I'm looking for some pushback. But what KPIs do you look for to see if the turnaround is truly happening and what they're saying is working?
Are users transacting more, and are they transacting for larger value, so over time? So those are this is the only thing that matters really. So in simple terms, revenue per user, is that going up? Are they transacting more or less? And the value amount that they're transacting for, is that going up or down? So you want to see both trend upwards, and you want to see them doing that without sacrificing margins. So at the end of the day, you want to see that take rate conversion. That's like the simplest way to look at it is just look at like, okay, they processed this much volume, how much of that turned into revenue? And that is, the take rate. So you want to see that bleeding stop, and you want to see margins. I think the margins are actually good for the company. They have pretty good margins. As you mentioned, they're not the cheapest alternative out there. So if they can maintain margins or even increase them over time, which is look like that they are planning on doing, I think those are the main KPIs to look out for if you're just tracking PayPal on the side and don't actually dive deep into everything that they're doing, because you kind of, as you mentioned, you kind of get into this bull hysteria if you just listen to all their announcements. They're big, I don't know what people typically call them, but they do a lot of press releases. Oh, we're partnering here, we're partnering here, and then you're like, okay, so what are the financial results from that partnership? Like we're not seeing it. So yeah,
it's a good news show.
Yeah, so if you're just tracking the company, look for those things. Is the take rate bleeding stopping, and what are the payment volumes looking like, and what are the margins? But I think the main confusion about PayPal, so when you talk about to other investors, or if people are listening to this and they're not deep into the company, people still believe, if you say PayPal, they're like, PayPal, no one uses PayPal. Like it's been like 5-6 years, or like I paid someone for like a PlayStation off of eBay like with PayPal. They still don't know like what PayPal does. A majority of PayPal's revenue is not what most people think PayPal is. So people think that you go to paypal.com, you sign in to the site, and then you transfer money to someone that also has a PayPal account. That's what people think PayPal is. They don't understand that like they're a payment processor primarily. Like no matter if you pay with them Visa, MasterCard, Apple Pay, Google Pay, like they integrate all different kinds of payments and they power like e-commerce. So if you've been doing any online shopping, in the past month, then you probably use PayPal, or even over the past 5-10 years, you probably use PayPal because they, do something like 20% of all online e-commerce. Like that's their primary business, not what people believe is like the main thing of PayPal. That's why people are so bearish initially before they actually look deeper into the company. They just think that I log in here, I transfer money to someone that also logs into the site, and that's that. That's not the company.
So revenue per user, do you look at revenue divided by like active accounts or transaction margin dollars? What do you look at?
The main one is payment transactions per average active account. So they disclose, how many active accounts they have at the end of the period, and you can get the average, by looking at the start of the period and end. So payment transactions per average active account, they disclose the number of payment transactions. So you take that and then you just divide the payment transactions by average active accounts, and then you get the payment transactions per average, account. It's pretty simple.
Yeah. Do you look at the branded checkout volume? Do you think, Braintree is growing significantly faster than the PayPal branded button? Do you think over time this should become a larger part of the pie, Braintree, thus potentially lowering margins? Or what do you think?
No, I think the fastest grower is Venmo. So as that becomes, it's currently the lowest part of the mix. So I think segmented, they break out branded, which is, online. So when you choose pay with PayPal on a website, that's, the highest margin segment. It is currently around 30%, it has stayed, around that 30% range for, many quarters. But as you mentioned, it's not a grower. So it grows something like, I think 8% last quarter. And then you have, the peer-to-peer, and segment is when you, make transactions, from a person to another. It could be remittances, it could be whatever, That is actually growing above, let me look. So that's growing at 12.6%. So that's already, displacing branded. And they are, fairly similar size. The volumes are like 132 billion, for the quarter. And then you have, the payment service provided, the PSP segment. And that is, as you mentioned, Braintree is growing 8.4%. So that is, roughly equivalent to branded. So it's not, displacing branded yet, but, it is up there. And then you have other, online and offline experiences, which is at 12%. So, things are growing fast, and Venmo is at 14%. So all of the segments, in terms of volume, are growing kind of fast. So it doesn't look like something will become a really small part of the mix. It seems like most things are growing, in line. But over time, I think Venmo it hasn't been like monetized at all historically. So I think that's a big potential as that grows in the mix, and it's also the fastest grower. And by the talks, when you listen to management, it seems like Venmo is like the main focus point, which I understand because Venmo is a really strong brand. You have Cash App and Venmo, and if you can start expanding it more globally and stuff like that, I think Venmo is like the big potential for the future, in terms of the payment volume mix. But it doesn't seem like, branded is, growing that slowly.
Just to challenge your own thesis, maybe, if you had to play devil's advocate against your own investment thesis, the reason for holding PayPal, what is the one thing or maybe a couple things that worry you the most and would make you sell the company?
If the market is actually right, if we start to see, a decline of 6% per year or, a decline at all, that shows that, okay, the market saw something that I didn't, and that would make me sell. But as of right now, if I ask myself, okay, what is the worst case scenario, right? Yeah. That's a good thing to ask yourself when you're making an investment. Like, what's the worst thing that could happen to the business? And then you ask yourself, would that mean that the company is gonna grow negative 6% for the next 10 years? As long as the answer is like no, then I mean, it is, a clear buy for me personally, because I think they do show that we're not talking about, a pre-revenue risky company. This is like more like a legacy company undergoing, a transition. So people like to say that, they are like remaking the whole company. That's not what's happening. They're making an already dominant company. They're just making it better. As I mentioned, like the margin profile is fine. They're generating a lot of cash. That's how they're able to, to do stock buybacks without taking on debt. You have other payment processors like Fiserv. You look at how many buybacks they're doing. They're like, oh my God, they're buying back so many shares. And then you look, oh, they're taking out the debt to buy back shares at like expensive prices, and the stock price dropped 60% from when they started buying shares. And you're like, oh my God, what is the company doing? Like, no, this is still like, I wouldn't say it is like a high quality, like it's not a FICO, it's not a S&P Global, like it's not one of those, juggernauts, but it's still a good company, good margins, generates a lot of cash. Their growth has slowed down since COVID, and they're now finding ways to, accelerate that growth. So it is not so much that they're like remaking the whole business model. Like, no, they still process, a fifth of all online transactions. They're doing it at good margins. As long as they keep growing, I mean, and we're not looking at a scenario where they're going negative 6% per year. I just don't see a reality where that happens. So I believe at current prices, they make no sense. So yeah, what would make me sell is if I see some structural, decline across the whole business that makes me think like, okay, the market was right. This company is heading, for the, dumps. It is going to decline by this much, every year. They have no chance, of actually growing at all. Then I would consider selling my shares. But, for now, I'm fine being patient. As we've been talking about, they are positioning themselves for the next era of finance. They are one of the first, major players that are, going into agentic AI transactions where, you talk to a chatbot, whichever you prefer. They are partnering with Google, with OpenAI, whatever you use. If you use Gemini, Anthropic, ChatGPT, whatever, the future of shopping is that you're going to be talking to a chatbot and you're going to, okay, I'm looking for this. Like, what are some recommended? Like, I've been doing that in Japan, actually. I've been taken to Grok. I've been taken to Gemini for like, okay, I live here and this is what I want to buy. It's like a whole new market, right? I'm in Japan now. I just moved from Sweden like a month ago. There are a lot of things that I need to buy, like this computer screen. Like, I built this whole office, in a month. And I'm like, okay, I don't know this place. I need to buy these things. What are the recommended places? What are the recommended products? Like, okay, which screen should I buy? This is what I'm going to use it for. Like, they aggregate all of that for you. And I had to go and buy it. But if I could just, in the chat window, click like, okay, yes, buy, done. Like, that's the future of finance. And they are positioning well for it. And they are the only ones that are actually making major moves towards that. I mean, obviously, Stripe is not public, so we don't know, all of the things that they're doing to the same degree as with PayPal. But, they're an early mover. They are positioning well for the future. They are starting to monetize parts of their business that, had a lot of potential. That was wasted potential, like Venmo, until they started, doing stuff with it. They are innovating in terms of their checkout to differentiate it. This, seamless guest checkout experience where you don't need to create an account for PayPal to know what your address is, for PayPal to know what kind of cards you use and stuff like that. So that's already happening. So everything that I see is telling me that no, the revenue is not going to drop by 6% every year. So for now, I'm fine being patient. And as I mentioned, if the stock price just stays here or, even declines further, that will just accelerate the pace of buybacks. So they will even take the company private even sooner. So the downside here is extremely limited, is what I'm seeing.
Any final thoughts before closing off?
Yeah, sure. So, as with any investment, when I value it, I try to forecast, okay, what is the business going to be doing? What is, potentially this Venmo monetization going to mean? So look at all avenues of growth, cash flows, and risk, like as you do when you do, intrinsic valuation. And I get to something like, over, 100% upside just to reach fair value, right? And then I look at the valuation model. So I'm having over 100% upside to fair value. And I didn't even value potential for the ads business, which could be, even larger than the payment processing business. As we mentioned, their scale on consumer data is unparalleled. So it is up to them to execute on that. But the beautiful thing here is that I'm not valuing the potential of ads. So whatever ads produces, I get for free as long as I buy, under fair intrinsic value, according to my model. So there's a lot of things that they're doing that I'm not even including in my, valuation assessment that I will simply get for free. So the upside is, potentially massive for PayPal. And I believe for people that are wondering, like, okay, when's the stock gonna move? As I mentioned, I don't know. I don't even look at stock prices, day to day or even weekly. Maybe I'll check my portfolio once a month. But I get that question a lot over on my Substack, where I share a lot of this research. So I get those questions like, okay, so what will it take for PayPal to move? So I want to hear your commentary first, and then I'll share mine. So what do you think the market is waiting for? Because I think we can both agree that most people are aware that it is cheap and undervalued. Most people agree, like or hate the company. Even people that hate the company are like, yeah, it looks cheap. So what would it take, in your opinion, for the stock price to start moving?
I don't think there needs to be a lot of good things to happen. I think for like a very average, like 10 to 12% return, PayPal doesn't have to do a lot of things very well. I mean, they should, I think it can retire like 3 to 9% of its float annually. It's looking like they might retire like 9% this year. And this should obviously drop over time by 2030. But they should be able to lower costs over time as well, with some AI automations maybe.
I think they have over 20K people. So it's bloated for sure.
It's very bloated, yeah. I arrive at like double-digit EPS growth. There is so much optionality with this company. Like you mentioned, the data vault, Venmo is very undermonetized. It still has like access to this incredible double-sided network effect with merchants and consumers. I actually really like the company, so I wanted to talk to you just to get your thoughts. But I'm still looking for people who are listening to definitely give us pushback. Maybe we're wrong, maybe. So tell us, share your thesis, share your arguments.
So, Aswat Damodharan, that, the dean of valuation, a renowned professor within valuation, he often talks about when you value scenarios, to give it the 3 P's test. So is it possible? And then is it plausible? And is it probable? I challenge anyone to give me a probable scenario or even like plausible scenario of PayPal actually deserving to trade where it's trading today, which is, roughly negative 6% per year, assuming they don't drop in margins. If you drop the margins to below like 10%, then maybe it's like a negative 2-3% per year, but that's still like not growing. So if anyone can give me a plausible scenario, like it is not, beyond the possible stage, because a lot of things are possible. Like you shouldn't, value that too much. But give me a plausible or probable scenario for PayPal, which actually deserves to trade at, I think it's $56 currently. I would love to hear that. I would love to see it, because as we've been talking about, we all love to be challenged and see like, okay, is really the market this wrong or am I wrong? So I always love to hear pushback, but give me a plausible or probable scenario where it's actually starting to decline, and I will definitely reassess my position in PayPal.
There are a ton of companies out there that deserve to be trading where they are, but PayPal does feel like they have the optionality and they have the cash flow. They have close to no net debt. They can pay it off very easily. Besides they earn interest on what they have. I mean, Fastlane, Venmo, the ads business, which we have no clue, but it can be massive. Just look at Amazon ads, which is growing like crazy. You know, there's a lot to like. There are a couple things to dislike. The new incentives make a lot of sense. They're not really focused on revenue growth anymore, which can be skewed. They're more focused on like the transaction margin dollars, which makes a lot more sense. The biggest green flag for me personally would be to see management buying in the open market. That would give me a lot of confidence to do so myself as well.
Yeah, it's a strange one. Why wouldn't they be doing that? So, people often talk about, well, you can sell shares for a lot of reasons. It could be tax implications, scheduled sales, things that are out of your control or necessary because you got an award, whatever. They say that, well, they typically only buy stock of their own company using their own money for a simple reason, and that is that they believe that it is undervalued and that is going up. And yeah, the insider transactions for PayPal are really puzzling. Like, why wouldn't they be purchasing the company? Now, that also goes against what we've been talking about in the beginning, where we said that, they're kind of transparent. The CFO goes actively, they goes to like Morgan Stanley conferences, goes to all these different banks and talks about the company, with an analyst. And she gives like bearish remarks. She's like honest, like, we're seeing a slowdown in consumer spending. So they don't seem to be the kind that would hype up the stock. And then you can ask yourself, okay, is the reason because they want to, retire more shares? Or do they want the stock to stay here? Or like what could be, the possibilities are endless. So I typically, when I value a business, like it's not an input, like I don't really care about it, but it is an interesting point of view for sure. Like, why is this happening?
Yeah, and we shouldn't forget, I mean, the people working for PayPal are not necessarily like investors, right? If you have 200K worth of PayPal shares and you see it drop by 50%, most employees, most people that don't really understand how the market works and are even passionate about investing, I would probably be worried as well. Like, if I buy more now, would it go down even further? I just think it would be a vote of confidence for investors if like the management team, Alex or the CFO even, just bought some of their stock in the open market, because they've been granted like quite a lot of stock. I think close to like 10 million for just becoming CEO. So that I would just like to see it, but we'll see. We'll see what happens. Yeah.
Yeah. As for the stablecoin you asked about earlier, I seem to have forgotten to answer. The core part, to my understanding, I'm not a crypto expert, but from what I can gather is that the sole purpose is to, it raises margins, right? The transactions that can be done over blockchain have the potential to be a lot cheaper, in the back end. So they're pushing, towards that. And to my recollection, the stable coin that they have, like Pi USD, it is growing quite rapidly, in the total market cap. I think I don't have the latest metric in my head, but I've been hearing numbers like they've reached above, $30 billion in market cap. So was it 30 million? Wherever it is growing. And the purpose, to my understanding, is to increase margins. So yeah, they seem to be, on all the, hyped fronts, be it AI, with the agentic pay, be it ads, with, their potential ads platform that is, hopefully that we get some real information about shortly, with the stable coins, with the blockchain. So they seem to be doing a lot. So just, be patient and see how it plays out. And the thing is, even if these things don't play out, the business is still, like, for what it is undervalued, even if you just look at what they have today. So yeah, interesting company. Yeah. I wouldn't say it's like one of those, best companies in the market. Like, it's not a Palantir that is completely dominant. It's not like a FICO that is, 99.9% market share and undisrupted. Like, it's not one of those. It's just like a massive company that has decelerated its growth and is being punished for it. Like, it's still a quality company. I wouldn't say it's like a super high quality company yet, but time will tell where we end up with PayPal.
I am no stable coins expert either, but I believe the risk is like cutting out the middleman, right? Where stablecoins theoretically allow a user to send $100 to a merchant for like a cent in fees on a blockchain. But I don't. Maybe
the
I'm
question
just
is, how does PayPal make money on that? So no, we'll see as that. I think mostly used for remittances and stuff like that. When you're sending money back home. Let's say that I have family in Sweden, but I work in Japan, so I send remittances back to my family in Sweden. With scenarios like you have a lot of people in Southeast Asia moving to like the US and they send money. So I think it cuts out a lot of the costs associated with that. I don't know if it's only in the back end or also if the user feels that. So, but to my understanding, the overall goal
mostly
is
back
to.
end.
So the overall goal is to increase PayPal's margins for these kind of transactions over time as they start to build more solutions on top of it. But we'll see. I'm no expert at all at that part of the business.
Yeah. Well, thank you so much, Emir, for coming on the show again. Where can listeners find and learn more about you and your research?
So the Substack is available at research.typefcapital.com. So all my research can be found there. Typically I cover, high quality wide moat companies. I write, extensive research on them. Most of the articles are, partially behind a paywall, but still, a lot of the content is available for free. So feel free to check it out. Cover PayPal. You can read, we only scratched the surface in this, 50 minutes, but the articles themselves typically cover everything you need to know, top to bottom of the business. So feel free to check it out.
I can highly recommend Emir's research. I'll make sure to put the links in the description. It's high quality. It's real. You gotta like in-depth research because he goes deep. You gotta
it can be boring for a lot of people. It's not a quick read mostly, and so are my YouTube videos. So I'm also available on YouTube. I think it's Emir. It's not that I'm not that active on YouTube. Primarily on Substack.
I'll make sure to put it.
Yeah, so
in the description.
If you like 50-minute long videos of just staring at data in Excel and talking about companies, then maybe it's for you. For most people, I found out they don't enjoy that. Yeah,
I wonder. Well, anyway, thank you so much for coming on the show, and I'm sure we'll talk again, Emir.
Yeah, thank you for having me.